This video reviews Shin-Etsu Chemical's financial results for the first quarter of fiscal year 2025, covering the period from April to June 2025. Shin-Etsu Chemical is Japan's largest chemical company, with a market capitalization of nearly 10 trillion yen. It holds the top global market share for PVC, polyvinyl chloride resins, and semiconductor silicon. Shin-Etsu also has a significant international presence, with manufacturing facilities in various countries. Summary of overall business performance. During the first quarter, Shin-Etsu Chemical faced a challenging global business environment due to new U.S. tariff policies introduced in April and the resulting disruptions across industries. These geopolitical developments, along with continued oversupply issues in China, contributed to difficult market conditions for several of the company's products. Despite this, Shin-Etsu maintained strong communication with customers and ensured a stable supply of high-quality products, responding swiftly to market needs. As a result, operating income aligned with its forecast from April, while ordinary income and net income surpassed forecasts by 3% and 5% respectively. Net sales were 628.5 billion yen, up 5% year-on-year, while net income was 126.4 billion yen, down 12%. The progress rate against the annual net income forecast of 470 billion yen is 26.9%. Progress so far is in line with the plan. Overview of segment performance. Overall, in all segments, revenue increased in the first quarter, but profitability was negatively impacted compared to the same period last year. Segment contributions to net sales were led by electronics materials, which accounted for 38%, and infrastructure materials followed with 39%. In terms of operating income, electronics materials accounted for half of the total. Infrastructure materials contributed 32%. Overall, electronics materials and infrastructure materials were the key drivers of both sales and profit as usual. Infrastructure Materials Segment. The Infrastructure Materials segment posted net sales of 244.4 billion yen, a 5% increase, but operating income dropped significantly by 22% to 52.8 billion yen. For PVC, which is polyvinyl chloride, price increases were achieved in some regions earlier in the year, but a broader recovery from the price declines seen at the end of the previous year had not materialized. In North America, pricing efforts continued due to strong demand, although the situation remained unstable. In overseas markets such as Asia, PVC prices remained weak, but the company leveraged its broad sales network to optimize results. For caustic soda, both volume and sales grew from January to March and stayed steady into April to June. Demand in North America remained solid, although export and spot order activity softened. Electronics Materials Segment. The Electronics Materials segment achieved net sales of 240.2 billion yen, up 6% from the same quarter last year, while operating income fell by 7% to 83.1 billion yen. The semiconductor market continued to show uneven demand trends across applications and sectors. In response, Shin-Etsu prioritized the shipment of semiconductor materials such as silicon wafers, photoresists, and photomask blanks to high-growth markets. The company also addressed the implications of U.S. tariffs and China's export restrictions, particularly concerning rare earth magnets used in hard disk drives. Meanwhile, construction progressed as planned on a new production base for photoresists in Isesaki City, Gunma Prefecture, as part of the company's broader strategy to enhance its role as a diversified supplier of electronic materials. Forecasts and outlook. Shin-Etsu Chemical acknowledges that it remains difficult to provide a precise forecast for full-year results due to the many unpredictable factors affecting its business environment. However, assuming tariff negotiations between the United States and other major countries reach reasonable resolution soon, and that current exemptions remain unchanged, The company has issued a revised forecast for the fiscal year 2025. Shin-Etsu now expects net sales of 2.4 trillion yen, a 6% decrease from the previous fiscal year. Operating income is projected to decline by 14%, and ordinary income is expected to drop by 15%. Net income is forecast to fall by 12% to 470 billion yen. The forecast assumes a dividend of 53 yen per share for both the interim and year-end payments, totaling 106 yen annually, the same as the previous fiscal year. As expected, the forecast showed a decline in profits, but at least the dividend will remain unchanged, which is a positive point. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 4,530 yen as of July 25th, and the US dollar stock price is $15.98 as of July 24th. In the past few days, until yesterday, the stock price had been rising and reached 5,000 yen, as an agreement was reached for Trump tariffs to be set at 15%. However, Shin-Etsu disclosed its previously undisclosed FY2025 earnings forecast yesterday, which showed a projected 12% decline in profits compared to the previous year, leading to a significant drop in the stock price today. Current PBR is 2.05, PER is 18.1, dividend yield is 2.34%. Compared to past valuation indicators, the stock price has become slightly undervalued after today's decline. Conclusion. In the first quarter, Shin-Etsu Chemical reported sales growth across all segments, but profitability declined due to market challenges and tariff impacts. Shin-Etsu exceeded its ordinary and net income forecasts slightly in the first quarter, but its full-year forecast indicates a decline in profits. Despite this, dividends will remain unchanged, providing some reassurance to investors. While the agreement on the new tariffs between Japan and the US is reassuring for now, future economic developments and trends in overseas markets could have a significant impact on Shin-Etsu.